With what's going on today, many may be wondering how big the stock market crash really is, and how many times this has happened before. This is the top 6 most major stock market crashes in history. Number 6. Friday the 13th. Although it's seen as a mini crash, the Friday the 13th mini crash is still one of the worst stock market crashes in history. Known as Black Friday to some, it occurred on Friday the 13th, 1989. It was caused by a reaction to a news story of the breakdown of a $6.7 billion leverage buyout deal for UAL Corporation. UAL Corporation is the parent company of United Airlines. As the UAL deal plummeted, this helped set off the collapse of the junk bond market. And the deal unraveled because the Association of Flight Attendants pulled out of the deal when management declined to agree to the terms while negotiating over an employee stock ownership plan, ESOP, designed fund to support buyout. All in all, this crash made the stock market go down by 12.3%. Yikes! Number 5. The stock market downturn of 2002. Another one of the worst in U.S. history, the stock market downturn of 2002 occurred after recovering from the September 11 attacks. Indices began to slide steadily in March 2002, including dramatic declines in July and September, leading to lows that were last reached in 1997 and 1998. From this downturn that impacted the stock markets in the US and Canada, and then in Europe and Asia, it can be seen as a much bigger bear market or correction that started in 2000. And this occurred right after a bull market that led to unnatural high stock valuations, and the stock market dropping more than 50%. Number 4. The financial crisis of 2007 to 2008. Also seen as the global financial crisis and the 2008 financial crisis, the financial crisis of 2007 to 2008 is known to be one of the worst financial crises since the Great Depression of the 1930s. While it's among the biggest stock market crashes in U.S. history, it began in 2007, when there was a critical point in the subprime mortgage market in the U.S. The disaster grew into a full-blown international banking incident, from the collapse of the investment bank Lehman Brothers on September 15, 2008. Through intense risk-taking by banks like Lehman Brothers that helped magnify the financial impact globally, there were major bailouts of financial institutions and other palliative monetary and fiscal policies that were employed to stop a possible collapse of the world financial system. However, the crisis was followed by a global economic downturn, the Great Recession. Number 3. The Wall Street crash of 1929. To begin things off, we go back to the Wall Street crash of 1929, also known as the Great Crash. After coming out of the Roaring '20s, American cities were wealthy thanks to the Industrial Revolution, but had a massive overproduction that caused one of the biggest market crashes in history, going down by 12.82%. Number 2. The 2010 Flash Crash. The 2010 Flash Crash was a $1 trillion stock market crash that happened in the U.S. stock market on May 6, 2010. It all occurred at 2:32 p.m. and lasted just about 36 minutes. Yeah, that long. The stock indexes like the P500, Dow Jones Industrial Average, and NASDAQ Composite collapsed and got right back up pretty quickly from the crash. The Dow Jones Industrial Average actually has its largest intraday point drop from that day, and the event is usually described as one of the most turbulent periods in the history of financial markets. Number 1. The stock market crash of 1987. The worst global financial crisis unfolded in the autumn of 1987, on a day known infamously as Black Monday. A chain reaction of market distress sent global stock exchanges plummeting in a matter of hours. In the United States, the Dow Jones Industrial Average dropped 22.6% in a single trading session, a loss that remains the largest one-day stock market decline in history.